Mr. J. Powell and friends surprised the market with a full 0.5% rate cut this week. It's the first rate cut in 4 years. Now, did mortgages go down by 0.5% as well? Here's a great explanation by Diana Olick at CNBC. Let's take a listen.
The average rate on the 30-year fix actually rose again today. Yes, rose to 6.17%. It also rose yesterday. So why did rates go up after the Fed cut? Well, because mortgage rates don't follow the Fed funds rate exactly. They loosely follow the yield on the 10-year Treasury, which went up. But more importantly, the mortgage market has been expecting a cut and pricing it into mortgage rates for more than a month. Rates have also been reacting to economic data showing inflation moderating. So take today's rate and compare it to the rate on July 1st, just a few months ago, which was 7.14%. That is a full percentage point drop. So what does that mean to today's home buyer? Well, if you're buying a $400,000 home with 20% down on a 30-year fix, your monthly payment today, not including taxes and insurance, is $210 less than it was on July 1st. And that's why we saw existing home sales in August drop 2.5% from July to the lowest August reading since 2010, because those sales are based on contracts signed in late June and July when rates were higher. Sales fell even though inventory improved slightly. Now, most agents will tell you that potential buyers are still waiting for mortgage rates to go even lower. We've seen that in the mortgage demand to buy a home. It's still lower than it was a year ago, even though rates are so much lower than they were last year at this time. Kelly?
I just think that it's worth emphasizing this maybe 10 times, Diana. The Fed cut rates and mortgage rates are going higher.
Yes, in fact, 6 basis points higher since the Fed cut the rate. And again, it's because they were already priced in, and a lot of people in the mortgage market expected rates to go up a little bit. But the trajectory, at least, is somewhat lower. It's lower than it was, obviously, as I said, in July, far lower than it was a year ago. We hit 8% last October, and the expectation is that rates will continue to come down very slowly, but again, not some dramatic drop after the